Switching gears then a little bit and moving on to what we might call the strategic update. Some of this is going to be a bit of a review since our last get-together on October 4th. But in essence, our vision remains very clear. We want to be a leading investment company with core investments in the financial arena, but also a very flexible and opportunistic approach to both private equity investments as well as capital markets activity. We pride ourselves on being different from other companies. We have a fairly lean organization. We're quite active in terms of our involvement with our underlying investments, and we have a very hands-on approach and a great degree of flexibility in terms of how we approach our investments. The team is strong and has a good track record of long-term value creation. On October 4th, we also announced some changes to our structure. Specifically, we break the company now into 3 different operating units. The Financial Institutions Group, which is engaged in investment both in banking, insurance, and other alternative financials. Private equity, operating as an independent private equity function, essentially has the ability to move between different sectors, and also to take stakes in what we might call listed private equity, or companies that go from being listed to potentially being unlisted. A good example of that would be our investment in Inspired Gaming. Then finally, on the capital markets side, a function which is actively engaged in trading as well as execution and hedging on behalf of the parent company. We believe that this structure will significantly enhance our ability to drive profitability and growth going forward, and we look forward to beginning to discuss and disclose more and more information along those 3 lines going forward, although that's not part of what we're doing today for the 9-month period. In terms of our investments, we also try to split those into 4 separate categories, where we try to understand our involvement on the basis of both the degree to which we're involved with each investment, as well as the size of the individual stakes. And in the situations where we have a low degree of involvement and the size of the stake is relatively small, i.e. underneath 10%, we're operating in what we call a trading box, and this is currently about 10% of the balance sheet of the company. Secondly, in situations where we have a high degree of involvement but the stakes are relatively low, we're engaged in what we call active ownership. And examples of that would be AMR and Finnair and Commerzbank. And this is where we use dialogue with management, communication with other shareholders, and other avenues at our disposal to try to affect change and improve value. Co-investment is a field that we haven't done an awful lot of. Currently about 5% of the balance sheets, and this is where we have relatively little involvement with the underlying investment and are principally relying on our partners to drive the value creation going forward. In situations where we have a lead investor role, these are situations where a degree of involvement is quite significant and the stake is high. This is where we have direct either board influence or have significant members on the board of the companies that we're engaged with. Here we are actively involved in developing the strategy and the structure of the underlying asset and provide significant commitment and expertise, as we've done and shown in the cases both of Glitnit, TM, Gatescreen, and Refresco. Moving on then to talk about some of our key listed investments. I'm not going to go through every single one. I'm just going to touch on a few that I think are worth highlighting. Beginning with Glitnit Bank, a bank obviously listed on the OMX Nordic Exchange. It is a bank that has developed, I believe, a very interesting and strong franchise in the Nordic region. We currently hold about 32% of this particular asset, and we have seen, I think, relatively strong performance of the bank over the last several years, as well as what has already transpired in 2007. The opportunities for growth are significant, and we believe that the company can both secure and strengthen its foothold in its existing markets, both here in Iceland and in Norway and elsewhere, The growth will be driven by increased corporate and investment banking activity. And of course, the bank is always continuing to expand its geographical platform and footprint, and we look forward to working with the bank as we can in terms of making that happen. And I think this is a good example of our comfort that in every single case, regardless of what has happened to the share price of the underlying assets, the quality of the assets are extremely good. TM Insurance, this is a company that we acquired 84% of in the third quarter, 2007. We currently own, just as an update, 97.9% or close to 98% of the company as of the 31st of October, and have issued a voluntary takeover bid to all of the remaining shareholders. We're currently in dialogue with the Financial Supervisory Authority and are awaiting their consent to the transaction, and we're hoping that that will be forthcoming shortly. This is the third largest insurance company in Iceland. Our rationale for doing this is, besides what we believe is attractive valuation, as indicated in the graph on the lower right-hand corner, we see this as a company with good potential, and this potential lies both in terms of developing the operation further in Iceland in terms of extracting greater underwriting profit from the core insurance business, but also to use it as a growth platform in terms of expanding its geographical footprint. It's a company that already is present in the Norwegian market, as you may know, and we hope that it will continue to extend its footprint to other parts of the Nordic region. Commerzbank, a bank that you're familiar with, second largest bank in Germany. We currently hold just under 4.3% of the bank, and this is a very solid bank which has been on a significant turnaround in the last several years. It has some very interesting assets both in the Eastern European arena, but also within the German market, where it is the leading Mittelstand bank. One of the reasons we like this bank is that we believe that it is significantly undervalued when you compare it to its peers. There is a significant potential in the bank to return capital to its shareholders, and we are awaiting further news flow from the bank in this particular regard. And then finally, it is also a bank that is ripe to participate in the ongoing consolidation in the financial services industry, as we've seen so vividly happening over the summer, particularly in the European market. AMR, this is a company that we hold currently about 9.1% of. Again, the parent firm of several different operating units, including American Eagle, American Beacon, as well as the A Advantage program and the MRO business. Here the opportunity is to create significant value by spinning off some of the operating assets of the company, and in fact we have gone forward and suggested they spin out their A Advantage program. Our own calculations estimate that the net value that can be created is close to 4 billion, and we've seen many others come forward with numbers that are quite similar, so we're not alone in believing that this indeed is a key opportunity. And what has been very interesting is to see the impact that we've been able to have in just a few weeks that we have been engaged in this particular endeavor. And if you look, for instance, at the write-up of the analysts following their most recent earnings call, it doesn't matter whether it's Morgan Stanley, Merrill Lynch, Bear Stearns, Credit Suisse, they're all very much in favor of an effort like this. And I really feel that we have been able to move the industry forward in terms of thinking about the issue. Morgan Stanley, for example, issued their report on the industry only 2 weeks after we came forward with our statement that this is something that AMR should consider. And what has been very interesting is that after the earnings call by AMR, we've also heard from Northwest, from US Air, and from Delta, who have all come forward to say that this is an issue that they are actively exploring. Secondly, we've seen the press handled this in a very favorable manner, basically jumping on the bandwagon and indicating that this is something that the company needs to look at very seriously. And this, of course, means that the grassroots support for the initiative among other shareholders of AMR is growing day by day. And we feel that the pressure on the company to act is increasing significantly, which we will hopefully see some evidence of in the not-too-distant future.